Hey everybody, this is Jose Blasco here. We are about to start. Please go ahead and let's use this time, these few seconds before the beginning of the session for a sound check. So please confirm with a quick message that you hear my voice. That would be appreciated so I know we can start. Thank you so much. So please go ahead. I will be maximizing the introduction slide in the meantime. Okay. Very nice, everyone. Thank you so much. Thank you so much. Bojan, how are you, my friend? Thomas, good to see you as well. Everyone else as well. Pleasure to have you in the session. Let's begin. Lisa, how are you? Okay, so today it's October 29, 2019. My name is Jose Blasco. I will be your guide in today's session. Today's session is about longer term trading. So we're going to be using options for most of the trades, probably all of the trades. We'll be exploiting directional trading as well as non-directional trading. And 30 minutes from now, as we all know, the market will be opening. So we'll be ready to execute the trades that we find. And then we'll keep looking for more opportunities as the markets are open and trading. As always, we have a disclaimer. We'll do it quickly so we can start. The following video clips demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. Here we go. We got it. Session is formally introduced. Here is our beautiful trade station with the even more beautiful UFOs, isn't it? And we are ready to begin, okay? Wonderful, thank you. Thank you, everyone. Okay, someday I'm gonna have to measure how long it takes for me to do this disclaimer because it felt like flying today. Anyway, so let's begin. We are gonna be looking at directional trades here in this section of the scanner. And then the bottom part is non-directional trades. We normally start focusing on the non-directional, purely non-directional, because the two below are actually neutral long, neutral short, which is a form of non-directional, but the ones that are pure non-directional will be the one with the acronym ND, obviously for non-directional. So we're gonna be looking at those trades, looking for nice credits, and then we'll also be looking at directional trades, long and short, for debits in this case, where we are going to be exposing ourselves to profits in the form of price movement, where with the non-directional, which are credits, we will expose ourselves to profits in the form of time passing mostly. Okay, there are more factors, but that would be the easy way to say it. So anyway, so let's begin. Okay, let's begin. I'm going to go ahead and click on Adobe first of all. And while I'm clicking on Adobe, which is the first stock on the list, I am also bringing, as you can see, Yahoo Finance. So I can go ahead and type Adobe in the search box, so we can have more information about when is the earnings reports expected to be, which is December 13. This is critical because when doing non-directional trades, you want to make sure that the trade that we are executing have odds in our favor. And in order to do so, we are running our scanner here, isn't it? And one of the things the scanner is doing is looking for high level of premiums found in Adobe right now. That's why we have it in the list. But at the same time, what would be concerning is that the reason for those high level of premiums is the earnings date. That's why we need to be aware of this date, and that is why the first step that we do when planning for trades in the stock market is to look for those earnings, so we are aware if we're going to have a surprise in the middle of the trade or is not likely to be. Okay, so we got 49% probability with regular session for Adobe. With pre and post market, 49 becomes 43, which is worse. Therefore, we're going to go for regular session. For directional trades, by the way, I would not be happy with 49%. But given the fact that we are doing non-directional trades, so we'll take 49%. We've gone as low as 48% in the case of non-directional trades. Given the fact that we make money on time passing and there are other factors helping the trade, so we are okay being just a little flexible there. In normal cases, you always want this figure to be 50% or more, isn't it? But for non-directional, so we can make an exception. Okay. So what do we have here? Okay. So we have multiple UFOs below, multiple UFOs above, etc., etc. And the way we approach non-directional trading, now that we know that the earning date is all the way on December. Okay. So when looking at the calendar, next Friday, it's November 1st. Then we got November 8th. November 15th, November 22nd. So we got many dates that we could use for that trade prior to the December expiration that we saw earlier. Okay, so we're gonna load Option Station Pro. We will do that, and mechanically we are gonna be typing Adobe. We're gonna input the parameters for options. Here we go. We're gonna input the parameters. Okay, so Adobe, input the parameters for the trade to be an iron condor. We'll input 1 standard deviation above and 1 standard deviation below, and we'll see what that gives us, and we'll start planning from there. So as I always say, right click, analyze cell, an iron condor without even thinking, just insert this iron condor in the analysis tab, so we can change those figures from -5% to +1 standard deviation, and from +5% to -1 standard deviation. And what these allow us to understand is that based on pure stats and probabilities, from now until November 1st, which is the next expiration, which is only a few days from now, we would expect that stock to move between 263 point something to 278 point something. That would be the expectation. So 279 is the value I have in my mind after doing this little exercise, and therefore 279 would put us all the way here. But remember, when we do non-directional trades, we need at least 2 UFOs on our end, and obviously that brings us up to 290 more than 270 something. Okay, so we are talking about a pretty wide range going all the way to 290. So my little concern there is that using a November 1st expiration, which is quite close, the 290 is likely to pay very little. And here we go. We are only being paid 3 cents for the 290, which is not a surprise, given the fact that that UFO is quite far. So how do we deal with this? Simple. We go check the next expiration date, which is October 8th, and see how much we get paid for the 290, which in this case is 74 cents, and that is certainly acceptable. Now, it's acceptable from a premium point of view, but we also need to double check and confirm if it's acceptable from a probability point of view, and this is done by switching the date from November 1st to November 8th. So now we are updated the values, and in this case we got 286.87, 256.48. Okay, so it's looking, I would say, good, because 286.87 is certainly something happening around here, meaning that our purple line, which is where we're gonna sell options, it's certainly beyond the 286 point something. Okay, so we're doing good in that sense. Okay, and now what we're gonna do as well is to take the current price and calculate the vertical distance from the current price to that purple line and project it below to see how far we go. And if we were to project it below, it's looking like the UFO to be used would be that UFO here around 249. Now, the question again, back to probabilities, is 249 beyond 256? And the answer is yes. 249 is indeed beyond 256. So what does that mean? It means that we have just found a range of price with 2 UFOs above, 2 UFOs below. Those UFOs are statistically far enough from the current price, so we are possibly going to survive the risk of price movement during those dates, okay, which is the dates from now until November 8th. And if price was to move either too aggressively up or down, we got UFOs to defend ourselves. That will likely bring price closer to the midpoint, or at least create bounces, giving us time for time to pass approaching November 8th, which is when we make the full profit on this trade. So up to this point, everything is making sense for this trade to be valid. So the next step then would be to define the options to be utilized in this trade. So we're gonna be buying calls, okay, above, and selling calls below the calls that we buy. We said earlier that we're going to use November 8, 2019 expiration date. Earnings, out of curiosity, I'm going to write it down. Earnings are on December, I don't remember by heart, December 13. Okay, so earnings are on December 13. And all the way below the purple line, we're going to be selling puts, in this case, not calls, and then we'll buy puts below the puts we sold. This technically is called an iron condor, and I know many of you are very familiar with this. For the ones of you less familiar with iron condors, it's a very intimidating name, isn't it? But don't be intimidated. It's quite simple. You are utilizing options above, options below, and as long as price stays in between the lines, then on November 8th, all the premium collected remains yours and you make a full profit. Okay, so now the key question is, which calls are we going to sell? Above, we already said it's going to be the 290. So I want to go back to the option chain to check on the strike price increments. So from 290, we go to 292.5. Okay, to 292.5. And it seems that on the bottom part, we're going to have to use 250 to 47.5. I would say that is likely going to be the case. Yeah, we got 249, so there is no 249. So then the nearest one is going to be 250. So we'll sell the 250 and buy the 247.5. And on the upper part, we will buy the 292.5, which is $2.5 dollars difference, which is what's available, as you saw, on the option chain. Okay. Okay, so let's adjust this on our analysis tab. By the way, I'm pretty happy as well to see that November 8 happens to be the expiration date with the greatest amount of premium built in, 33% versus 29 versus 30 or 27. So, you know, we are selling an expiration date that does seem to carry great level of premium. Okay, so let's do it again. So we are doing 297.5 and 290, and below we are doing 247.5 and 250. Okay, good. So that's the trade. Now, let me bring our sharpening notes to the screen. Agung trade pair, would you mind to express yourself a little more clearly, if that's okay? I'm not sure what you mean by pair. In this case, we're trading options. If you refer to Forex pairs, this is options. We are dealing with ADBE, which is a stock. So options on ADBE. In case I have misunderstood your question, please go ahead and clarify for me on the chat box. Okay, so looking for our rules. Here we go. So here are the rules I was looking for. When selling options, remember, we said that we are always shooting for at least 35 cents. The ones that we are selling is the 290 and the 250. So the 290 is paying us 74 cents. We saw that before already. The 250 is paying us 82 cents. Okay. Normally the puts pay you more than the calls. That's why I always start with the calls, because if the calls don't pay you enough, it's no need to check the puts. Okay. So we do have the premium we want. Okay. And with that, now what we want to make sure is that the credit collected is at least 15% of the difference between strikes, which represents our risk. So the difference between strikes, really, it's quite simple. It's $2.5, isn't it? 2.5, which is the difference between 292.5 and 290, or 247.5 and 250. It's $2.5, either above or below. So that's the difference between strikes. And we want to collect a level of premium which is at least 15% of that, and that would be 37 cents, okay, 37.5 cents. That's the minimum we want to collect. Well, the market hasn't opened yet, but it seems that if the market was to open now, the midpoint of that iron condor is 38 cents, which is exactly what we need. Okay, so this trade seems to be valid, but of course, we'll need to come back to this trade and revalidate this trade 15 minutes from now, which is when the market will open, and we will have at that time, we will have real-time data updating the option chain, and we'll be able to see exactly what's available today, because this is what was available yesterday at the closing price when the market ended the trading session. Normally, we should be able to get about the same, maybe even a little more. We'll see. But it's looking like we may have a trade here, certainly looking like it's looking pretty good for this trade to be valid. Okay, so I will save my chart here, and I will continue and go for the next one. Any questions so far, everyone? If you have any question, please let me know. So the next one that we have here that I would like to check is Baidu. Okay, notice I'm looking at stocks with higher price points first. Okay, I mean, normally you get more premium like that. So I'm trying to save a little bit of my time. Instead of looking at all the stocks, I'll start first with the ones that are more likely to give us what we need. So with Baidu, we need to be careful here, because November 7 is the earnings date, meaning that when looking at the calendar, okay, I just went a little too fast there. When looking at the calendar, November 7 is the earning date, and therefore we will not be allowed to use November 8. We will need to use the prior expiration date, which is November 1st. Okay, so unless we have, many UFOs very close by, I'm pretty positive it will not work. Okay. By the way, also probabilities are looking very discouraging here when looking at regular session. So let's take a look at pre and post market to see if Baidu is a good candidate or not, and it's not. 45% is certainly not enough for us to even consider approaching that particular opportunity. Okay. So what else do we have here? Disney. So let me see, Disney, DIS. And I believe we were working on Disney the other day. Do we have a trade with Disney? No, we don't. Okay, I was confused for a second here. No, we don't have a trade with Disney. So let's go ahead and take a look at Disney, see what we have. Also, of course, check earnings. So Disney is reporting earnings on November 6th. Okay, so we're going to have probably the same problem. There is no UFOs close by. We do have 50%. So if I was to use the 137, okay, Disney, okay, Disney. If I was to do the 137 using November 1st, how much I get paid probably is not going to be enough. I want to check quickly. Yeah, 6 cents is not enough. It's too far given the fact that November 1st is too close. Okay, so we'll pass on Disney. What else do we have here? Facebook. Okay, I remember we also checked Facebook a few days ago, but what I don't remember is what was the earning date. So let's check again. So Facebook, October 31st. Okay, so certainly we cannot deal with Facebook. LQD, that's an ETF, so we'll pass on that. MLNX, I believe we also checked that one in the prior session. MLNX, earning dates for this stock is October 30, so we cannot deal with that one either. Okay, so NXPI, yeah, I'm not sure about that stock actually. I have never traded that stock before, so I am not sure about the liquidity level that we may have. So we can certainly check that. But let's look at the earnings date first. We got earnings. That was on the 20th. That was yesterday. Okay, so remember TradeStation updates options data at the end of day. So probably when I run the scanner, that data was corresponding to yesterday. Okay, and then we have Walmart. Okay, so WMT. Okay, so this is the last stock that is in the $100 or above range. So that would be November 14, meaning that this would allow us to use November 8. Okay, again, when looking at the calendar, November 14 happens to be here. So the prior Friday is November 8. So we can use November 1st or November 8. Okay, but to do that we need multiple UFOs. Okay, so where are we at in the bigger picture here? So monthly time frame of Walmart, this is making all times high. Yeah, making all times high. So we will not have two red UFOs in the above portion of the chart, and therefore we will have to pass on this one. Everyone, give me a little bit of feedback here. How is it going so far? Am I going too fast, too far? Pace is just good. Everybody okay? If you're okay, say you're okay, please. Don't remain silent. So I know everybody is good. I would appreciate a little bit of feedback. Okay, so what do we have right now? So we went through the list of non-directional trades. It seems that Adobe is a valid candidate. We'll come back to that as the market opens in 10 minutes. We still have multiple symbols to check. You know, ExxonMobil, Merck, you know, there are multiple stocks here that could be very valid candidates. But because it's 9:20 a.m. New York time, option chains normally reset at this time, and therefore, if I was to load a stock, the option chain would be zeroed out. So instead of keep working on non-directional trades, I will come back to that after the market opens. And what I'm going to do now is to begin preparing for the directional trades, because the directional trades imply a little bit more work on the chart first before we look at the option chain. So I can certainly use 10 minutes to do that and prepare myself. That way we save time for when the market opens. Bojan, great pace is good. Lisa, watching intently, nice, perfect. Thank you so much for that, guys. So let's begin with American Airlines. Okay, so what do we have with American Airlines? So with American Airlines, we have very clearly confirmed climate, but hey, be very careful here. We got 13 candles into a climate which is supposed to be 4. Okay, so this is extremely stretched, okay, and it could stretch more, but certainly entering now, it's way too late, okay, so no need to check further. Let's go for BSX, okay, and see what we have with that stock. With that stock is looking a little better, okay, so we got 3 candles out of 7, okay, so climate-wise, we are okay. Now, the one thing that we need is that we need green UFOs located around, let's call it 40. Okay, we need UFOs around 40. But, and that stock, by the way, is likely to open down by 1.3%. So this may be a good opportunity for us to purchase at a little bit of a lower price. Okay, but we need to allow for that pending data to be fully loaded. Here we go. We have it now. So 51.43%, that's what we have. With regular session data with pre and post market, 51% becomes 46, so certainly not better. So we're gonna use regular session, and I was saying that we need to look for green UFOs around 40, and unfortunately at this price, you know, we do not have any. We do have one a little higher. So that means that probably today BSX is not gonna be a good candidate, but maybe tomorrow, yes, because I would anticipate the average to be a little higher today, maybe 40, 40.2, since the prior candle was an up candle. You know, we may have a little bit of effect of that average moving up, okay? And if this stock was to go down today, then tomorrow that average may be around 40.6 or so, and then you would be allowed to take the trade around this price and ride it back up, okay? But not today. So we're gonna look at Citibank, or I should say Citigroup, and look at what we have. And here we have a very stretched market, very similar to American Airlines, 12 candles out of 6. So certainly staying away from it would be a better idea. So we will then go ahead and check Intel Corporation. See if we have an opportunity there. So Intel Corporation, a very, very powerful move, probably because of earnings. We got 2 candles into a climate that should be 5. 53.57 is the current average, which is going to be a little higher later. But right now, well, we still need to wait for this to be loaded. That's it, it's loaded. We got 50% probabilities with the regular session. Pre and post market would give us, instead of 50.94, we would get how much? Okay, we're about to see it. 59. That's much better, okay? Now, yeah, that's gonna work. This is gonna work because the average currently is 53.57, which this is already close enough to 61, isn't it? But on top of that, with the up candle yesterday, even though today is going to open a little lower, given this very intense move that didn't happen too late back in time. So I would anticipate that average to be much higher today. And therefore, as the market opens, we're going to be looking at Intel, because I believe that we're going to have a potential opportunity here for us to execute. Okay, so Intel will be a candidate. Las Vegas Sand. Let's see what we have there. Okay, so no need to work on Las Vegas Sand. 11 candles out of 6, late to the party. What about Microsoft? Microsoft was making all-time highs, I believe, yesterday. Okay, so what do we have? 2 candles out of 5. That's what we have with Microsoft. 140 is the average. Okay, today is going to be a little higher, so 140 something. We do have 140 something here, so we just need to wait until PD goes away. Okay, and the moment PD goes away, it means all the data is loaded and we'll be able to assess probabilities much better. Okay, so we just need to wait, a little bit of patience, and we'll have all the data loaded. So we got 56% with pre and post market data. Regular session is 50%, so certainly well, still PD, we're gonna wait, even though of course it should be about the same, 50.98, 50.88. Okay, come on, 1, 2, 3, pending data. Okay, just be reported for us. Almost there. That's it. We got 50%. Okay, so it's better to use pre and post market. Okay, and certainly we do have these 140 something, 2 UFOs overlapping each other. That could be a very beautiful trade on Microsoft as well, meeting our criteria, climate, moving average, etc. Okay, so we will come back to Microsoft after the market opens. Micron, MU. Good to see you, Parvais. MU. So, well, it seems that we planned a trade the other day with this one. So, is the trade still valid? So, I would say yes. So, we got two dots into the climate. 46.35. Actually 46.35 is somewhere here in the middle. Okay, so that would not be too good. But anyway, we got 55% with pre-post market. Regular session gives us 50%. So yeah, so this trade will not be valid anymore. Okay, because the average has moved. Of course, they are not lining up the UFO, and that's why it will not be valid any longer. Okay, so Micron we're gonna pass. Netflix. Let's see what's happening with Netflix. So 1 dot into the climate, 1 out of 6, all confirm. 49% probability, that is not good. What about pre and post market? Pre and post market is still 49, so we will pass on Netflix for directional trades and switch to PayPal. So PayPal holdings, let's take a look. Climate, 2 candles, 2 dots into the climate, 2 out of 7. That is nice. We got 103.20. That's the average. Okay, maybe a little higher today. Not looking good at the moment because at 103 we got nothing at all. So I'm just waiting for pending data as well. We will be able to load the pre and post market and find out if pre and post market we got the probabilities we need and we got the UFOs we need. So we got 51% with pre and post market, but no UFO. Okay, and regular session, it's 50%. So really it would be better to use pre and post market, but we got no UFO. Okay, no UFO lining up with 103.20, so we will pass. And SIF, okay, so we have 11 candles out of 9, so we are still in time for this trade. Okay, so 11 out of 9, because you would take 9, you would calculate half of 9, which is 4.5, and you would add it to 9, which makes it 13.5. So today when the market opens, we're going to have a new dot. That's going to be dot number 12. Okay? And we can go all the way to 13.5. In other words, today and tomorrow is still okay for you to enter, as long as we got UFOs lining up with 3478, which we do have right here, 3482, 3478, close enough. Now, I didn't check pre and post market. That's 55 with regular session, 41 with pre and post market. So we would use pre and post market. Okay, so we will look at SYF as well. So those are 3 opportunities that could be valid, which is Intel, Microsoft, and SYF. And the market is about to open, but very quickly I would like to also check the opportunities to get short. So we have eBay. I'm just going to click on all of them. So data downloads. Okay, market just opened. Galid Science, we have Twitter, Nike, and also Texas Instruments. So all of those are candidates for opportunities that are bearish. Okay, so I will come back to this in a bit. I just clicked on everything, so everything is loaded. But I would like to go back to Adobe, which is non-directional. The market just opened, as I just said. So we have market data on the option chain. And the first thing I would like to do is to calculate to see what type of premium we get and see if this trade is to be executed or not. So let's go ahead and check Adobe. I would say it is likely that we're going to have an opportunity to execute. Well, actually, right now, as we speak, we got 34 cents, 35, 36. You can see how liquidity is entering the market. Remember, we need to collect a minimum of 37.5. Remember that from before? Okay, so liquidity is coming in the market, so we should see that value improving a little bit. Okay, and you know we certainly need to get those 38 cents. Okay, I'm running up to 38, at least 38. We need to get that. The bid price is 85, the ask price is 17, so there is a pretty big difference here. And again, certainly, you know, using a weekly expiration on Adobe is not like it's going to be the most liquid trade in your life, but also because the market just opened, you know, we are about to see liquidity probably improve that spread. So what I'm going to do is I will place an order, okay, and you could certainly mimic my action here. Of course, you decide if you're going to use real money, paper money, a larger size or a smaller size, but I am going to go ahead and enter a trade with 38 cents. Okay, that's what I'm going to do. Right now I got 31. Okay, so I'm not going to get filled immediately, but if later during the day I do get 38, I will get filled. So I am entering a day order. Okay, so if I don't get filled during the day, the order will expire automatically. I am entering a day order with 38 cents to get into this iron condor. One more instruction I would like to give everybody. This should be clear from the sharpening sessions we have done, but just in case, we have $2.5 of strike price increments, isn't it? Between 290 and 292.5 or 247.5 and 250. So it's $2.5. And that means that the risk of the trade is 2.5 times 100, which is $250. Now, if I sell this option for 38 and I get filled for 38, then I am going to collect 38, so my maximum risk of 250 is now diminished to 212. In other words, if you do this Iron Condor with one contract like I'm doing, your risk is $212. If you do it with two contracts, okay, two, if you do it like that, now your risk is double. Okay, if you do it with three contracts, then your risk is triple. So I'm gonna do it with one contract and that's it. Notice how the price here has been improving. Now it's 36. Okay, so again, being just a little patient, we should be able to get our 38 just a little later in the day, or maybe just a few minutes from now. So I'm just gonna go ahead and place the order. Yes, 1, 2, 3, yes. So my order is now in the system. If I look at my manage tab, you can see here on the top, I do have an Iron Condor waiting to get filled at the price of 38 cents, and it's a day order, meaning that if I don't get filled, the order will be canceled. Okay? Cool. Okay, so yeah, so 36 cents is what we have right now. So if you guys are joining me in this trade and you were to get filled and I was to be distracted because I am doing other things, please let me know. And also it would be nice that you share with the group how much you got filled at, in case some of you are being a little pickier than me and you are going for 40 cents or something like that and you get filled. It'd be good that you share with the group so that way other traders can also take advantage of it, okay? Good. Okay, so trade number one is Adobe. We have it in. That is it. So let's go ahead and complete our plan for the directional trades that we found, starting with Intel. Okay. So Intel loading here. 54.29. We said that for Intel we were going to use pre and post market. So 54.27, it's right here. Okay, it's just a little above this. Okay, which if Intel was to fall, certainly that would be a good valid entry point. Now, having said that, just in order to find other opportunities, I will pass on this one, and here is why. If you look at the average true range of Intel is $1.21 per day. So $1.21 means that if Intel was to move the whole move, it would drop to 55 something. And 54, it's way below, it's 2 ATRs. So could you have Intel move 2 ATRs in one day? Of course, but it's not so likely. So something you could do is to set an alert, okay? By the way, TradingView is amazing for this purpose because the alerts that you set on TradingView are on the server side. So you, not Trade with UFOs, TradingView, I meant to use. So when you set an alert with TradingView, the alert stays on the server side, and therefore, even if your computer is off, you will be alerted. Okay. What's very cool as well with TradingView is that you install the mobile app, and that way you get the alerts on your phone as well. Okay, which is pretty cool. Okay. So anyway, so you can just very easily load here INTC. Okay, find the price you want, okay, and then just right click and add alert, okay, and you can just yourself follow the steps and add your alert, okay. Cool. Okay, so next one we said was Microsoft. Let's see what's going on with Microsoft. So Microsoft has an updated average of 140.82. So yes, as expected, the top part of this UFO is 140.80. Fantastic. Okay, very, very, very nice opportunity. But again, the ATR for Microsoft is 229. We are like $3 away from the entry. Okay, so I would prefer to plan other trades that may be closer to entry. In case we find them, it seems it's looking like we're gonna have to wait for longer with Microsoft to get filled. Okay, probably the day after or the day after, okay, something like that. So next one was SYF. Okay, but again, with Microsoft as well, make sure you place yourself an alert. Okay, maybe I went too fast. Let me go back. So you may want to have an alert around, I don't know, 141.5, something like that. So you would just use TradingView, okay, MSFT, Okay, find 141.5, something like that, and we just right click, okay, add alert. And again, the moment you do that, the alert lives on the server side. So even if your computer is off, even if your trading view is off, even if your TradeStation is off, you will be alerted based on your preferences. How is it going so far, everybody? It's been a collection of like 15 minutes. I've seen nothing on the chat box. So please give me a little feedback, okay? A little bit of heartbeat so I know that you guys are there. SYF is the next one that we said. So let's take a look at SYF. So what do we have? We got 41% with pre and post market. We got 55% with the regular session. Good. 34.99 is the average. That UFO is located at 35. So very nice. Okay, we do have, and that one is a little closer, isn't it? 67 cents. Okay, from 78. If you subtract 67 cents, which is the daily ATR, you are basically getting into that UFO. So you see, that trade is worth it for me to plan. No need to go ahead and set an alert. You can just go ahead and plan it because you may get to the entry today. Okay, so let's go for it. Okay, let's go for it. Step one, check the climate. Climate is 12 out of 9. Okay, now caution. We are still okay to enter the trade as we did before, as we said before, but we are a little late in the climate. Therefore, this trade is to be executed with half of the size that you normally use in your trades. Okay, if normally you risk, I don't know, $200 per trade, so this one you would want to risk $100 per trade. Okay, and that will impact the amount of call contracts that you would use in this trade. Okay, cool. So now step two, check the target. So to check the target, I'm going to activate AutoUFOs. I will maximize the chart. Okay, scroll down. So do we have any UFO? So we have no red UFOs. That's interesting. What about, I want to check the daily time frame to see where we're at. So here we go. Daily time frame. Oh, that was already daily. Sorry for that. Weekly time frame. Okay, so we are talking about January 18. Okay, this is January 18. So the peak that we saw there, that is January 18. So, you know, we have no red UFO above. Okay, and I believe that this peak there on the left, that corresponds with the all-time high value for that stock when that stock was at the highest, which is January 18. Okay, so even though we have loaded the chart with the daily time frame, as you can see, okay, it doesn't look like there is anything above, and therefore this trade is to be treated like that stock is making all-time high, even though it's not really. At least at this moment in time, there is nothing significant from that would stop that stock from going higher. There is no red UFO. Okay, so we're gonna take this trade with no target and only trail stop and trail stop and trail stop following price, attempting to maximize the profit in this potential up move. Okay, that's gonna be the plan. So let's go for it. We are going to buy a call. We're just gonna keep it simple because there is no target, so we cannot do a spread. We're just gonna buy a call. Okay, we cannot calculate the time to target because there is no target. Okay, no red UFO. Okay, so we're gonna go with one call, and therefore the expiration date will be aligned with the earnings date to minimize the impact of time decay. Okay, so let's go ahead and look at SYF. Thanks for your feedback there in the chat box, guys. So this is SYF, looking at earnings as well. So SYF. So earnings for that stock happen on January 21st. Okay, January 21st. So January 21st, the expiration date that is the most aligned is January 17. Okay, so we're gonna use January 17, given the fact that earnings are on January 21st, 2020. Okay, so we will use an expiration date, which is January 17, 2020. Okay, so that's the plan. And the call that we're gonna buy, okay, we still need to decide that one. So the way we're gonna decide on that will be first pick any call. So right click, analyze and buy a single option, which is a call, because I clicked on the left, which is the call side. Okay, and the moment I got this, okay, I'm just gonna remove all my price slices and only input the one that corresponds with the entry, which is the top portion of the UFO, which is 35.12. So 35.12, that's the value I want to input. Okay, and what I'm looking for is I'm looking for delta values around 30, and the 36 is giving me a little too much, 42, so I'll try the 37, and the 37 is perfect. It's giving me that 30 delta that I was shooting for. Okay, so that is the trade, my friends. We're gonna be using January 17, 2020, and we're gonna buy the 37 call. The estimation when it comes to the price of this trade and therefore the risk is $58.54. Let's call it $60. So every call you buy will cost you around $60, and therefore the most you can lose is $60 per call. So if you are willing to risk $200, buy 3. If you are willing to risk $125, buy 2. Okay, so $60 per call, that is the expected value and therefore the expected risk. So I'm gonna place an order to buy using market price, and I'm gonna buy with an activation rule, okay, which is SYF goes below or equal than 35.12. That's the value that we got there. That's the value that we type here. Okay, so less than equal. And also I'm gonna make the order to be the order. So if I don't get filled today, then the order will be canceled and I can go ahead and reassess this trade tomorrow by running the same process we did today. Okay, so I'm just gonna click place order. Please, if I went too fast or you need something to be re-explained, go ahead and speak up. Type it on the chat box, because as you can see, I am about to click yes. That will confirm the placement of this order, and therefore I will then go ahead and go for the next trade. Okay. What do we have? The Iron Condor has not been filled yet. Okay, let's take a look at Adobe out of curiosity. What is the current midpoint? Current midpoint is 37.36. Okay, so you know, at any moment I may get filled on this trade. I mean, you don't get filled at the midpoint, you get filled at the ask. Okay, but again, with such a large difference, you will often see market makers meeting you, so they get the orders filled. Notice how the midpoint now is 38. Okay, and I haven't been filled yet, but I may get filled soon. Okay, and same may happen to you as well. Okay, so let's continue. We took care of 4 hour longs. I would like to now look at the shorts. We'll start with eBay, see what the chart tells us when it comes to eBay. Okay, so the daily time frame of eBay is telling us 3 candles out of 5. So we are in a down climate. 55% is the probability. That's good. Even though I do see a problem here, as you will see in a second. Pre and post market is 47, so we are going to use regular session is better. But in any case, notice how the average is 37, and at 37 we got nothing. Okay, we got absolutely nothing. So eBay is not a valid candidate for a trade. So we'll move into Gilead Sciences, which is the next potential opportunity with 50% with pre and post market. With regular session, and pre and post market would give us 48. So a regular session is a better bet. From a climate point of view, we got 2 candles into 4. So we are still on time. 64.46 would be the ideal price. So we are looking at something around 64, but there is nothing red color around 64. The red UFOs are all the way around 66, which is much higher. And that would imply a change of climate. So we're not going to do it. So Nike is the next candidate. So loading Nike, we got 4 candles out of 4. So careful, still okay taking the trade. Okay, still okay taking the trade. But if it's not today and it's going to be tomorrow, then you need to go with half of the size. Okay, so we need to be aware of that, and not only aware but also careful not to forget that the more extended the climate has been, the less likely it will last. Okay, even though sometimes we have very, very, very long-lasting climates, but again, it's all about statistics. Okay, and statistics suggest 3.73. We have to be respectful of that. So 53% is the UFO stats in a regular session with regular session data. Pre and post market data would bring it to how much? 55%, which is better. So we're gonna go for it. Okay, and we are looking for UFOs located at 92.36, which I believe we have it because that UFO is 92.32. So that UFO right here is lining up very nicely with the average, and therefore we have a potential opportunity right here. Right here. Oh, I just did a little mess here with the average true range. Let me fix that. So I will want it to be in number 2, and I will want it to be right axis. Okay. Oh, number 2 is this. Okay, so we'll make it number 3. Here we go. That's it. I got it. So 137.93, it's the value for the average true range. If you add 137 to 90, so basically you're getting into the 92 area. The UFO is 92.32. So you know what? I think it's worth it that we plan this trade because you could get there in one day. Okay, it's more likely to take 2, but it could be in one day given the proximity based on the ATR values. So, okay, so let's do it. So let's plan for the target. Okay, let's find a target here. So we're going to activate AutoUFO. We're going to be planning on a bearish trade here, which means that in this case, we do have a target, and that target for Nike would be located at 84.83. That would be the target. Okay, so we are looking at a like $8 move down, which is gonna produce a nice profit actually. You know, with the dynamic leverage provided by options. You know, $8 move on a $90 stock, that is likely going to be a nice profit. Okay, so our entry here is gonna be 92.32. So I am now calculating 92.32. I'm now calculating the time to target. We said the target would be located at 84.83. I just said that a minute ago. So we are talking about a $7.49 move. It's not 8, it's 7.49. Okay, the average true range is 1.3793. So 749 divided by 1.3793, that is 5.43, and we assume that will move at a speed of a net ATR each week, and each week is made of 7 days. So therefore we are looking at 38 days to get to the target. That's our estimation for time to target. It's 38 days. Okay, now careful as always, we need to be aware of earning dates. So Nike, here we go. Let's look at what the earning day would be. That would be December 18. So the question is, from now until December 18, do we have those 38 days? We need to. If not, that trade would not be valid to be executed, okay? So I said December 18. The expiration date that is the closest to that is December 20. And we got 52 days, okay, which is certainly more than 38. So we are fine, okay? We are fine. It's looking good. So because it's looking good and I have the target and I have the entry and I have everything, I'm just going to right click and analyze and buy a vertical spread. In this case, we will do a bear put spread. We'll do a spread instead of a single put because in this case, we do have a defined target. So entry, we said it was going to be 92 point, you know what, I forgot. Let me go ahead and look at it again. That would be 92.32. Okay, 92.32. 92.32, that's the entry. And the target, that one I do have it here, is 84.83. So I just typed on the top my entry value, okay, and below I just typed my target value, okay. So target 84, entry 92, okay, that's the plan. So how do we build the bear put spread? Okay, how do we build the bear put spread? Well, to build the bear put spread, we are going to have to, of course, use puts, where we will be buying a put, okay, somewhere in the middle between the entry price and the final target, and then we will be selling a put, which that put needs to be beyond the target. Okay, that's how we have to do it. Okay, so the target is 84.83, so that put would be more or less here, visually speaking, if you look at the price scale on the right. So so let's pick one. Okay, to look at the option chain. When looking at the option chain using December, we got 85. And then we got 82.5. Okay, so we don't have 84 or things like that, so we'll go for 82.5. This will be the put that we're gonna sell. And then, now that I got 82.5, I'm gonna select a put, which is the one that combined with the 82.5 gives me a delta of around 30 at entry. So in other words, -1 is sell. I'm gonna pick 82.5, okay? I'm gonna look at my deltas at the entry, which is right here, and that's 13.95, okay? Which means that the delta, the put I am purchasing is too low. So I'm gonna have to raise that put to the next one, which is 90, and that is giving me 23.92. I'm gonna have to raise it one more time, and the next time I raise it is gonna be 92.5. Okay, and that's now giving me too much delta, okay, 44. So the way to fix it then, I'm gonna have to work on both. I'm gonna use the 90, okay, that gives me the 23, but then the 82.5, I'll drop it to 80. Now I got 28, and if I drop it one more to 75, oh wow, I got $5 price increments, maybe now it's too much. Yeah, you will take it, okay, so we got 90, and we got 75, okay? And so what do we have? We have, number one, we have a delta around 30 at the entry, that's good. We got positive gamma at entry, that's required, but we also have positive gamma at the target. That is not always achievable, but as long as you're using liquid options, normally we do achieve that goal to benefit to the maximum of the dynamic leverage built-in options trading, okay? So 90.75 is the choice. Let me write it down for you. So we're going to use the 90 put and the 75. Ideally, we would have had something such as a 77.5, but it doesn't exist. And the expiration date that we're going to use is December, I think it was 17, right? December 17, 2020. Let me double check that again. Earnings is December 18. The option chain is December 20. Yeah, so I did it right at the beginning. It's December 20, okay, 2020, okay? Earnings are happening prior to that date. Okay, so make sure you get out prior to earnings. And by the way, the reason why I don't write the date is because those dates change. Right now, the date for earning is December 18. It may end up being December 16. So you'll have to watch it so you don't get a bad surprise with the earnings creating a large gap moving against your trade, okay? So make sure you keep that in mind. Anyway, this is the trade, okay? So we got the Adobe trade running, we got the Nike trade running, we got the SYF trade running. So let's, by the way, I didn't place the order, so let's place the order. So trade, activation rule, market, and I'll make it day order. Okay, so activation rule. So if Nike goes at or above 92.32, which again, that's my entry price, which is the same one I just typed, okay, then go ahead and buy that put spread. So 1, 2, 3, place order, yes, okay, and the order is in. So right now I got my iron condor waiting to get filled, and I have a trade on SYF waiting to get filled whenever that stock falls, and the trade with Nike waiting to get filled whenever that stock rallies up. Okay, so I got all of these ready, and that's what I'm waiting for now. I'm waiting for those fills. Out of curiosity, how are things with the Adobe trade? Anyone got filled on the Adobe trade? So it's showing 40 cents now. So, you know, if you haven't been filled at 38, you may get filled at 38 anytime. Okay, you may get filled anytime because again, you know, market makers will certainly be interested in making a market at some point. And yeah, so you are getting much closer now to getting filled if you haven't yet. Very good. So we just arrived to the top of the hour. So this is actually the time to conclude the session. So we have the trades here now ready to get filled and everything. So how did it go, everybody? Everybody okay? Everybody was able to follow, and I guess you guys are busy probably either placing the orders or making your notes. The recording will be posted in just a little bit as well, and you'll be able to review it if I went too fast at times, okay? But anyway, my pleasure to have been conducting the session today for you guys. I will see you in a few days. I'm not sure if it's at the end of the week or beginning of next week. We'll be connected again. In the meantime, of course, keep up the good work. Discipline goes first, is first priority. Follow your rules, don't break the rules, and keep putting some time and effort to develop that skill as well as that level of confidence that comes with the practice and the experience, guys. Okay, so keep up the good work. See you soon, everyone. You guys take care. Bye-bye, everyone.